So once again, good evening, everyone. Thank you for being here tonight. I really do appreciate it. Rick and I both appreciate this so much because we know you've got other things that you could certainly be doing, and there's other choices out there, and we do appreciate you guys showing up here. Um, Tonight, I want to give you some really, hopefully, some good information on some of the basic rules. And why am I going back to this? And you're only going to see this slide tonight because we're going to go right to some charts. But what I wanted to press on this is a little bit more of like a group coaching session, I guess, and in trying to help everyone understand how important it is to follow some basic rules in your trading. Okay. And I'm going to begin this tonight with just, you see, I've got that little badge over there about tough love. One of the things that happens a lot when I'm working with someone individually is we hold on so tightly to things we believe are true or we believe should be true, and we will argue for them even though they've proven not to work. Has anybody ever been there? I mean, I've been there a lot. Years and years and years, I fought that. Where, I would learn something about MACD. Well, at that point, from there on, MACD, I had to have MACD. You were crazy if you didn't use MACD. That guy told me that, and he obviously knew more than I did. So that must be the answer. Or some black box system that was going to auto trade for me and make everything just all right. I was going to get rich quick. Well, and that didn't work. And one of the things that I had to do when I'm talking about that tough love thing, and this is a thing that we all have to do as traders, we have to every once in a while reevaluate our trading. We have to reevaluate ourselves. Because let's remember that the physical act of trading is really pretty easy. And it's really pretty easy finding a stock that's trending up, right? Or trending with the direction of the market, whether you want to trade long or short. It's really not that hard to find a trending stock. The hard part about trading is managing ourselves. And managing those details within ourselves, all of those personal hangups that we have as traders. So what I'm going to ask everyone to do tonight, and one of the reasons that this came up, the market keeps making mistakes. Yeah, that's right. And if it's not the market, well, that dadgum president, if he'd just shut up, I'd have made money today. Or those stinking market makers, doggone it, it's all their fault that I don't make any money. I know I've used those excuses too. Always looking for someone else to apply the blame to when I wasn't making money in the market. And so tonight, I want to challenge each and every one of you listening here that you need to do that personal evaluation of yourself and your trading. And if you believe holding on to a specific group of indicators, or I have to watch this news program, or I have to do this every single day, or I can't be a good trader, I want you to take a look at your account and take a look at your trading and ask yourself, is that really true? Is it really true that I need to have this over here? That I need to have 5 indicators on my chart? That I need to have this, I need to confirm against this. I need to confirm against that. I need to watch this program to find those trades. I need all of those different things that you're doing right now. Because if it's not making you money, okay, Well, at least you're honest, Al. Just turn the sound volume down so you're not influenced by what they say. You're a funny guy, Al. We need to get together. So, so think about that for just a little bit and think about all of those things that you hold as the most important thing in your trading. And realize that if it's not working for you, it's up to you to change that. You have to have that difficult conversation with yourself and say, look, I'm messing up. This isn't working. I'm proving it day after day, month after month that this isn't working. I need to make a change. Okay? Now, I'm going to go one step further and say, if you're making money consistently, that if everything that you've got going is just where you want it to be, you're making money consistently, then keep doing exactly what you're doing. Okay? Don't change. Don't change up, and don't listen to a thing I have to say about putting things together if you're making money consistently. Okay? You need to close off that stuff. Stop going to the webinars. Stop going to, all of these different places where they're, the next super secret sauce that somebody has out there. And in all of that, dump all of that stuff and focus in on the things that are working. Okay? Because one of the things I find with a lot of traders that I work with is they are closer to success than they even think they are. They're closer to success because they know charting. They know the process of trading. They know candlestick charts. They know what a trend looks like. They know the indicators that they like to use pretty well. But what's hard for them to admit is it has nothing to do with all of those things for your success. It has everything to do with how you are responding to what you are seeing in the market. This morning, in the morning video, if you guys happen to watch that, by the way, I apologize, the morning note was all messed up. I don't know what happened, but I lost everything, and I ended up just recreating that first couple little paragraphs because I ran out of time. But I mentioned the fact, this morning to be really, really careful. Be really careful about chasing into that move in the morning. And when you think about it, you didn't really need me to tell you that. Because if you were doing the job that you need to be doing and evaluating the marketplace, you would have known that already. Market tends to get pretty slow and sluggish ahead of an FOMC announcement. A gap up open right ahead of major news likely doesn't go anywhere. And you know that. Most people know that. But we're not following through with the things we know are right and true when it comes to the market. Because we get caught up in our own emotion, right? I had financial networks. I'm on a dish satellite here for my television. I physically called Dish and said remove CNBC and Fox News or Fox Business. I don't want to see them anymore. Because I can tell you, for me, that messed me up like you couldn't believe. I get, all of that drama that they would build up, all of the excitement, everything gets all whipped up. And I would lose track of what I was supposed to be doing and get caught up in that mess. And it cost me tons and tons of money. So I removed it completely. They go, well, it's part of your package. I said, I know. I don't want it there. I don't want to be tempted by it anymore. And that's the level that you need to get to, I believe. Now, CNBC may not be a problem for you. But I will tell you this, if you're watching it every day and you're not making money, you might want to consider that. You might want to shut it off and just focus on what the price of the chart is telling you about a trade. So this morning, everyone got all whipped up. Futures were flying. I know I could just hear CNBC popping off with all of this different stuff, really building up the drama. Tons and tons of people chased in this morning, and then they immediately sold off the Dow. Okay? So what we have to do as traders is we need to eliminate the clutter in our lives, the things that are messing us up as a trader. If any of you have a full-time job or a job and you go out there and you're working for a living, your boss is going to be pretty emphatic about the fact you can't be playing around on Facebook. You can't be doing these other things. You can't be on your cell phone all the time because they want you focused on your job. But for some reason, as traders, when we get to, sit in our own little office, kind of in our own little world, we drop all of those things and pick up all of these bad habits. Well, I'm kind of bored today. Let's watch some YouTube. Or turn on the TV. Let's see a movie. Maybe there's a movie on today. And then you still try to trade. We need to remove those distractions that are affecting us as traders and focus on the job at hand of trading. Now, I had a question today because I was going through different charts and different setups, and I've started using just about all the time. I have the Volatility Stop up anymore because one of the things that is becoming a frustration to me is that we talk about the good quality setups, the good quality entries, the things that we're looking for in a trade, and yet over and over and over, we get questions that are charts that no one should even be looking at. And I have to wonder why. I have to wonder why when we go through so often about trading with a set of rules, trading with discipline, planning your trades, all of these different things, why we're not improving in that area. Now, I know we have brand new people here that have never heard this, and that's okay. We're always going to have those new people around. Okay. What about Investors Business Daily? I think if you get some good out of that, Jim, I've got no problem with that. I will tell you, though, if you're reading Investors Business Daily every day and your trading's not improving and hasn't improved, maybe you ought to think about cutting that out, finding out what it is that's distracting you or giving you that bias that's messing you up in your trading. Okay. Now, I've been keeping this volatility stop up a lot, but for like KG down there, I want you to understand that the volatility stop indicator or Rick's T-line channel that he is been teaching here lately. He will tell you this as fast as I will tell you this. Those are not buy-sell signals. They are not buy-sell indicators. There is no good quality buy-sell indicator that I know of, except price. Okay? Now, the volatility stop, and by the way, KG, if you go to my YouTube channel, go to the first video in the Consistent Profits video series. There's a link in that video to the ebook on the volatility stop. From within the ebook, there's links back to all the settings for TC2000 and all the settings that you need for the toss. I know because I checked it. Like 2 days ago, I checked it and rechecked all the links. So it is there and it is working. Okay? So, what part, Eric? About YouTube? Oh, where it is. Okay. When you go to my YouTube channel here, just a second. When you go to my YouTube channel, you're going to look for a series. Okay. When you look at the YouTube channel, they have headings called playlists. And if you just scroll down on my website or on the YouTube channel, you will see a playlist that's called Consistent Profits. Okay, there's the YouTube link. Go there, and please do me a favor if you go there. Please subscribe to my channel because I put all of this stuff out there for free. And that helps me out a lot in reaching more people, the more people that subscribe to me. So if you would do that, I truly would appreciate it. So if you look here on the YouTube, that's Facebook. I drug Facebook over there. I don't know how I did that, but I did. There is the YouTube channel. 2 ways that you can get there. You can just scroll down and there's going to be these playlists. Education Series Consistent Profits. Video number 1. In the description of video number 1. I'll just click on it and show you. Video number 1. Link for the Consistent Profits ebook. Right there. So you can download that and then get directly to the links that take you to those other PDFs. Okay? Okay. So, when we use the volatility stop or we use any other indicator, what are we trying to do? We're trying to improve our odds of a trade, right? Isn't that what technical analysis is all about? Trying to improve our odds in a trade. So when we do that technical analysis, we want to take that seriously. We want to take the time it takes to really look at that price action. I had a question today in Right Way Options about not being able to find enough of those trades to make money. And I said pick any stock. Any stock. and I'll show you trades. Long and short. What happens to us as traders is we get easily distracted by the next shiny thing, right? Someone posts in the room about such and some stock doing this, and we jump over there. And then another post and we jump over there. And another post and we jump over there. And we never really take the time to focus on the chart and what that chart is telling us. We're literally like a pickup or a vehicle stuck in mud. And the more you spin that tire, the worse it gets, right? Some of you may have never ever been stuck in mud. In the city of South, around here it's pretty common. One of the things you don't do if you get stuck in mud is just stand on the gas thinking that's going to help. Stuck in the snow, same thing. So what we have to do to get ourselves unstuck from that, what do we need to do? Well, Rick has talked about it. I have talked about it forever. Is the both of us, is to work from a watch list. You do not have to chase around the flavor of the day to find good trades. Now, if you're a day trader, a good day trader that makes money can rarely focus on more than about 3 stocks at a day. They find those trades that are moving, and that's what they're focused on. Because they have to be, because of that really quick price action of a day trade. So a swing trader has the ability to look at more stocks, but also needs to take that serious look at the price action and see what's going on in that chart. Now, just because a trade is moved today doesn't mean it's a trade today. And that gets down to the trade planning part of things. We spent quite a little time today in Right Way Options talking about trade planning. Putting those trades together, and it's not as hard as you guys think it is. Okay? Each and every one of you here needs to have an idea of what your risk tolerance is in a trade. You need to know what that is. What's that number? I can lose $150 a trade and it won't bother me. Now, obviously, not on every trade, but $150. If that's your risk tolerance, then that's your risk tolerance. Okay? And it's not really difficult to figure out what trades are low risk trades and what trades are not, or high risk trades with a volatility stop. The volatility stop is telling us price support, resistance, and trend. That's what it's telling us. And I repeat this all the time. If you're going to trade long, red turns to green, do not chase this. If we chase this, we have no idea in this move here that it won't fail at resistance and make a new low. I can tell you that plagued me for years as a trader. I would see that stock popping, get all wound up and excited, jump into that trade almost immediately before the stock pulled back. Anybody ever had that problem? That you rush in and then just get killed, clobbered on that trade. Eric says, not me. Bob C was here, he'd say once. That happened once. But here's what I'm talking about. When you look at the volatility stop, and there's nothing perfect about the volatility stop. Volatility stop is not going to guarantee you a winning trade. What it is going to do, though, is help you improve your odds. It's going to show you when you have a higher risk in a trade or a lower risk in a trade. So let's take a look at this. Red turns to green. We wait for the low risk entry. So either one of these bullish candles here could be used for a buy signal. I think honestly that second one is the one I would have probably picked up on. My stop loss, if I wait for that, you can see is very close. I can look at this right here, plan my risk and say if I enter this trade here, my stop loss is down here. I can look at that really, really fast and say, hey, I have a 2.5% risk in the trade. But I can also see right over here, there's another nice little consolidation right here. A great buy signal candle right there. But look at the volatility stop. To take this trade, I legitimately need to have a stop loss here, about 6.5%. It's easy to see which one is the better trade, right? And here's the great thing about this. I don't have to chase that trade because look what happened just a few days later. Stock moved up, consolidated, and then a beautiful buy signal entry came right here. Very close to the volatility stop. Risk in that trade, stop loss down below here. And then even tighter came right over here with the stop loss right down here. And tighter still came a trade with an entry signal there and a stop loss here. You see, I don't have to chase every trade. I don't have to rush to a position. But what I do have to do is acknowledge when that trade fits me or when it doesn't. And we seem to be missing that key element. Because we're in such a rush to find that stock that's popping up today, we don't plan the trade. We don't plan our risk. Mike Peterson reported the other day that he had like 6 or 7 stop outs. All option trades. And that he'd lost $300. Now, that is taking a low risk trade and cutting that risk quick. When the stock moves against him, he buries that thing. And the last time I checked, last time he posted something about it, I think he said he's up $3,200 for the month. And it's probably, the last time I looked, his average winning trade is less than $150. No, what you're doing, Mike, is you're planning your trade. You're keeping the risk tolerable in your position. You're working a plan that is put together back-to-back $3,000 months, and none of those are great big winners. So any chart that we look at has the potential of being traded. You know, we spend a lot of time looking for that that perfect chart. But you know, a trade like this that's trending, if we just simply mark up this chart, we could look at this and say, well, it's too far now. Don't want to trade that. Okay, so what I'm going to do is wait for the next entry. So mark up the chart, put it in the list, and then look at this stock. Look at this chart 3 times a day. You don't have to have a list of 3,000 stocks to be successful. As a matter of fact, I can tell you that big list of stocks is costing you a lot of money. because I can find trading patterns in just about any chart out there. And if we just stopped and focused on that chart, we could trade it. Well, Mike T, that comes down to knowing what your tolerance for risk is, planning your trade, and then setting that stop. It's the only way you can do that. But here's the thing, as much as we talk about that, I still get the emails. Man, I just lost $5,000 on a trade. I don't know what I'm doing wrong. Well, yeah, you do. We talk about it every day. But let's do it again. Because you're not listening, you're not hearing it. I don't know whether they're listening or not, but they're not hearing the message. Don't trade those trades. If it's going to have that kind of potential risk, don't trade them. Stop doing that. And get simple in your trading. The other thing that I would like to point out here that I think is really important. Members of Right Way Options have become really familiar with this. The stocks that we're looking at a lot of the time are never in the news. Yeah, exactly. Stop doing that. They're not in the news. They're the boring stocks. They're not the fast movers. They're not the ones being pushed around by the Nigerian brothers and their stupid, unusual option volume for the day thing. And I truly mean that, and I would tell them that if I was there face to face with them. It's stupid. They don't know what that volume is. They don't know if that's an institution hedging themselves. They don't know. They don't have a clue what that volume is. But we hype it up, and then everybody runs around and, oh, I got to buy this because the Nigerian brother says there's unusual volume in this option. Big deal. What does the price action of the chart tell you? Is it a buy or is it not a buy? Okay. Now I'm going to say this, and I'm going to keep saying this as well. If you look at a chart and you love the chart and it's below the red volatility stop, I want everyone to repeat after me. If you take that trade long, you're taking a aggressive entry into a trade. And when you take an aggressive entry into a trade, you better have the market condition really looking bullish that day. If the market condition was like it today, why would we even look or even waste half a second with a stock that would require an aggressive entry to enter it? Aren't we wasting our time? Is that productive time when the market is not producing all those warm and fuzzies that we want to have in the market, but we're chasing around and trying to put together a trade on a stock that has high risk and it's an aggressive entry? Okay. Now, I said long, Alan. This is a short trade all day long right now because it's below the volatility stop. Oh, good. Thank you for repeating. Okay, so when we see a stock that is below price resistance, and that's what the volatility stop tells us, is the stock is below price resistance. So how do we correct that if we're below price resistance? The only way we can correct that situation is prove that we can break that resistance and hold it as support. That's the only way we can prove the change. So right over here, this would have to break above here, either consolidate or pull back to hold support with buyers stepping in, supporting that new price level. That is the first place that we should be looking for a trade. That is also the first place where an uptrend is confirmed. Okay? So if we're constantly chasing around these trades and we're constantly rushing to positions and we're always trying to be aggressive in our positions, Betsy, I'm sorry. Please ask that question again. It's really tough for me to go back and keep up with what's going on. But please, if I've missed something or you didn't get your answer, please ask the question. Okay. So we can take any chart and we start going down through this list. Well, let's take a look at PCG. What happened here? PCG broke trend today. Broke support today. So what do we do with PCG? We can still keep it in a list because we've all seen stocks fail through, turn red, and then come back. But when that occurs, then we have to have that same repeatable pattern occur. This has to move up, prove hold of support, and then buyers stepping in to support it before we can trade it. Very much like this right here. Move up, consolidate. See my alert in the trade? Make the stock, the price action, prove to you what's going on. That would be like, Betsy, that would be like a consolidation. I'm assuming when you're saying that, when you're saying clusters, you're looking at a consolidation of price. See, I agree with that. Yeah, a consolidation of price over a period of time provides that level right here. When you look at a consolidation in price, what is that consolidation telling us? Well, first, let's look back a little bit further at the technical analysis. What happened here? The stock broke the downtrend. Then it consolidated and proved it held this level as support. Can you guys see there were no sellers below that level? There was also, until that buy signal occurred, there were no buyers above this level. So what we have to do is wait for the trade. Price starts building and pops through this here, the pop out of the box pattern. Minimum of 4 days in a tight consolidation is the pop out of the box pattern. And we have a potential trade with a stop loss that we can calculate. Now, I won't promise you every pop out of the box pattern is going to be a winning trade or even a low risk entry trade. So we still have to plan that trade carefully. Where should our stop loss be? How do we put that together? Is there too much risk for the potential reward in that trade? So we still have to follow the steps and maintain the discipline of our trading. You know, and that's one of those tough words that, you know, I kind of talked about tough love here a little bit. That's one of those tough words. How many times when we break discipline in our trading, when we do something we know we really shouldn't have done, does it cost us money? Most of the time, right? And if you don't know that, you need to go back and evaluate your losing trades. Because if you're not evaluating your losing trades, how do you know what's working and what's not for you? How are you going to find out where your problems are unless you review your losing trades? And I know that's the boring stuff, right? That's the stuff no one wants to do. If you guys remember your old job, probably 90% of your old job or your current job is things that you'd just rather not do. They're not the fun things. They're the things that you just have to grind out because it's part of the work. That's what planning a trade is. That's what following a set of rules is. That's what being disciplined to your plan is. You know, when a trade, I show this a lot of times. There'll be a chart that the stock is downtrending here. And maybe right over in here or something, the stock produced a really beautiful pattern setup, but it's still below the downtrend. Everyone in Right Way Options knows, because I say this a lot, you can't make me trade that. I will not trade it. You can't make me do it. And the reason is because I have been burned so many times by thinking I could pick that bottom. And all it does is pop up, hit that resistance, and fail. And so to solve that problem, I require the stock to break out, prove it holds support, with buyers stepping in for the entry into a trade. Every time. No exceptions. And I don't care what time frame you look at. It's the same pattern. It's the same pattern. If you guys like shorter term trades, intraday charts, this works exactly the same way. But it's only going to work for you if you follow the process. You have to follow that process and stick to a set of rules and be disciplined to them. Or it's not going to work. It's never going to work. Okay? Honestly, how hard is it to find a trending stock, particularly in this market? Pretty darn easy, right? And now ask yourself the question, of all those trending stocks, how many have you traded? Those stocks that just keep continuing to go up, how many have you traded? That's one of those things that you have to face yourself with and say, look, I'm messing this up. I got to settle down. I got to straighten up. I got to focus in on my trading. I got to shut off all of this noise, get rid of all of the distractions, and start focusing on the price action of that chart and making better decisions in my trading. I have to stick to a discipline and stay disciplined for every trade. And if we can easily find stocks that are trending with the direction of the market, how hard can it be to make money? All we have to do is wait for the next entry into the trade, right? There's nothing out there making us chase a trade when it's running up really hard. Nothing. There's nothing out there that's telling us that we have to pick the bottom to be successful. As a matter of fact, if you've been doing that and you're losing money, haven't you proven that doesn't work? But we keep doing it, right? We keep repeating the same mistakes over and over because we get set in our ways and say, look, this is the way I want it to be. But that doesn't matter. If you want it to be that way and it's not that way, who's got the problem here? The market or you? I know, Al, that kind of stuff just drives me nuts. It discredits the industry altogether. And, well, I won't go into that tonight. So we can take a list of stocks, really focus in on those stocks that are trending, and make trades out of them. It doesn't have to be in the news. It doesn't have to be a stock that's popping up today. As a matter of fact, the majority of the stocks that I'm looking at through the day are not stocks that are popping up today. The majority of the stocks I'm looking at are those that are setting up later. They've already moved. I'm waiting for the next setup. I'm preparing for the next trade. And trust me on this, guys. If you have a list of 100 trending stocks, you will never be able to trade all the trades that'll show up there. You won't have enough money to do it. Because they're always showing up. But we're not taking advantage of those because we're chasing around everything else. I hope this is making some sense. And I, this isn't meant to be preachy or anything, along those lines, but I truly, honestly want to help you improve your trading. And sometimes that means having that tough discussion of, well, I'm messing this up. So I need to fix this. And I need to fix this now. Not next week. My very next trade, I will plan it. I will make sure that it fits my risk tolerance. And if it doesn't, I will not trade it. I'm telling you that rule alone, guys. That's awesome, David. That's great to hear. You will never chase a trade again if you plan your trade. Never. Because if you plan your risk to your stop and that stock has already moved a bunch, you will never enter that trade because the risk is too high. So when people post those trades and ask Rick all the time, is this a great trade? And it's been up 7 days in a row. I want to reach through and shake them for a second and say, are you even looking at that chart? Are you even trying to plan? Are you even pretending to have a set of rules that you trade by? Or are you allowing your emotion to dictate everything you do in the market? We can't let our emotion override our discipline for our rules. Otherwise, we're sunk. Volatility Stop really doesn't help you decide an exit, William. What should be helping you decide your exit is your trade plan, your goal of your trade. Okay? And the support and resistance in the chart. So for example, when you look at Procter & Gamble, okay? On Friday, I sold my last contract to Procter & Gamble. I started that trade down here. Okay? I sold my last contract here. I took off part of the trade in here. I took off part of the trade in here. And I sold my last contract right here on Friday. Why? Look at the huge resistance zone right there. I mean, huge resistance zone. I took the profit and got out of the trade. So I'm looking at the price action of the chart to help with that. Now, if there's just blue sky above, if there's nothing above a stock, this is all-time highs here, and you're in a trade, then you're going to have to put together another method. And I've shown you guys that, and we can talk about that some other time. Using a Fibonacci tool or something like that to estimate where a target might be. But in those circumstances, you need to be thinking about your goal. How does Mike Peterson do $3,000 a month the last 2 months in profits, never making more than about $150 a trade on his trades without having a target in mind? When that stock, he's been in that stock 2 days to 9 days, and he's got a 15 to 20% gain in it, he's gone. It doesn't matter if it's a resistance. It doesn't matter if it's going to go way higher from that. He is gone. Over. Put the money in my account. That's how he's done that. Because he's trading a plan to an end result. When he sees $100, $150, if he even has a sense of nervousness, he's out of the trade. He's not trying to make a killing on every trade. He's trying to make consistent wins. Consistently base hitting, base hitting, base hitting, base hitting. Every once in a while he finds one that takes off and it's a home run. Oh, you guys are kind. Thank you very much. But hopefully this is making some sense to you. We don't have to keep doing all of these things that's losing us money. In fact, you need to make the decision now. Make it tonight, okay? Make it right now. Geez, I sound like an evangelist. Make the decision tonight. I'm not going to do this anymore. I'm not going to continue arguing for all of these things that everyone told me was supposed to be the way to win. But it's not working. How long are you going to continue to prove that it's not working? Before you say enough. Before you say, I got to fix this. Before you admit all those things that you have held to be true maybe aren't quite so true. Okay, so make that decision now. Don't keep doing this stuff. Don't keep doing what you're doing and continuing to lose money. And here's the thing that I used to do, guys, and it's the dumbest thing in the world. We've all done it. I was one of the world's worst. My account's going down, my account's going down. And every day I would argue that what I was doing was the right thing. It was the stupid market that wasn't participating with me. Now, think about how asinine that sounds when I say that. The market doesn't care if I make money or not. It doesn't care at all. So why not be on the side of making money? If the things aren't working, stop doing them. And start working to find the things that do work. That's awesome. That's awesome, Malcolm. That's exciting to hear, right, guys? Because what that tells you is anybody can do this. It's achievable for anyone if you buckle down into that set of rules, into a good quality plan, and stay disciplined to it. It's achievable. And it's not even that rare. But we have to make the change. We have to make the decision that this silliness that has been going on forever, I'm arguing for this indicator and this thing and that thing and multicolored charts and all these fancy things, and I have to watch this and I have to watch that, and you've proven for years it doesn't work. When are you going to lay that stuff down and stop fighting it? And just get with a program that's simple. And all we have to do is follow the price action of the chart. Stop fighting, stop predicting, and just let the trades that are proving themselves make you money. That's right, Betsy. There shouldn't be any ego. Remember, trading is a business. It's a business decision. If you were the CEO of any business and you had traders that were consistently losing you money and they're not making any changes, how long would they be there? Like I said, I really need to hang out with you, Al. How long would they be there? As a matter of fact, if you were the CEO of your business and you're evaluating you as a trader, would you still have a job? Think about that. So what are you going to do to fix that? And when are you going to start? Is there any time better than just right now? I'm not going to do this anymore. I'm going to follow a set of rules. I'm going to get disciplined. Okay? I'm going to stop chasing stuff around. I'm going to work from a good quality watch list. That doesn't mean that stuff that pops up in the room you can't look at. I do it all the time. But it's only after I've looked through my list, the place where I've been planning, the place where I've been working to find trades. That comes first. That's my bread and butter. Anything else that gets posted has to wait until I look through there. Because if it's new to my list, I haven't done an evaluation of it. Okay. Yep. Posted stocks that qualify can sure go on your watch list, mark them up, and wait for the next entry, right? Be disciplined. So, enough preaching. I hope you guys got something out of this tonight. Is there any particular questions I can help you with on that? Let's stay to this subject, if you don't mind. Let's stay to this subject. But if you have a specific question about following a plan. Now, I'm going to tell you this before we go. You don't have to follow my plan to be successful. You need to follow your plan to be successful. You don't need to follow Rick's plan to be successful. You need to follow your plan to be successful. Okay? You can use what you learned from us to gain a head start, but make it yours. because you will not follow a set of rules unless they're your rules. And even then, it's hard, right? It's hard to follow a set of rules. But you need to make them yours. How do I feel about holding over earnings? Betsy, I rarely hold over earnings unless I'm in a long-term position or a longer-term position trade. So, for example, here's a trade. This was an entry that we made right here on that little green arrow. On this weekly chart, it was meant for a long-term trade. We entered that in December of 2016, and we ended up getting called away on the trade clear over here in August 2017. Okay, so obviously we held through several earnings reports. But the reason we could hold through is because we already had a nice profit in the trade. We had a cushion, and then we hedged our trade with options. Okay? If I'm doing a short-term swing trade, I'm usually gone by the time earnings come. I will take advantage. This happens a lot in Microsoft. This is a hint, guys. Happens a lot in Microsoft. Microsoft tends to rally toward earnings in anticipation of the earnings report. I will trade the anticipation into earnings, but I'm out of it before earnings happen. I can do one better than that, Emily. I think that's how you pronounce her name. Can I give you a link to a quality stock scan for my watch list? If you go watch or go to my YouTube channel and watch the series on consistent profits, you can download an ebook that has links in it to one of my favorite scans. Okay? And then if you go further and watch the series on TC2000 on my YouTube channel. Let me show you this, guys, because I want everybody to see this, because I don't think anybody is, a lot of people don't know that this stuff is here. So here's the first on my series here on TC2000, how I set it up, how I scan, how I do all those kind of things. Okay? If you look in these videos, if I open up, I think this, maybe it's this one, and I open up the show more. Nope, not in this one. Must be number 3. Show more. Look at this. TC2000 discount link. TC2000 candlestick PCFs patterns PDF that I put together for you guys. TC2000 pattern codes PDF. 34 EMA trending 20 days scan code PDF. Right there. You tried which link? The ebook link? Okay, you guys are watching this right now, right? I'm going to click on the ebook link. There's the ebook. If you go down here to the bottom, towards the end, here's that area where I said the bonus files are. If I click on that, okay, it takes me to another place. Adding volatility stop. I think this one is to TC2000. Building a qualified watch list. TC2000 workshop scans. Volatility stop indicator for Thinkorswim. They work. Okay. Oh, cool. That's great, Steve. Awesome. That's awesome. Is there a way to transfer the trending stock scan to TOS? That's a real easy scan, Charles. You can probably ask anybody that knows the code of TC2000 to write that scan. It's very, very simple. All that trending stock scan is the 34 exponential moving average moving up. That's all it's doing. So it should be really easily I haven't written code for TC2000 for so long. I'd have to spend quite a bit of time thinking about it again. Ed, I know, he writes it all the time. He's like a little genius programmer. If you ask Ed, he might already have it, and he'll just give you the link so you can download it. So Ed, during the day, over in the Hit and Run Candlesticks room, you can catch him there for that, and he can get you those things. Otherwise, just take the scan that I currently have, get it to somebody in TOS, and ask them if they can recreate that for you. And they're usually pretty good about doing that. It wouldn't take them very long to do it. Okay. Al and Mike, you guys would get along great together. The reason that's funny, if you guys don't know Mike, is he is absolutely untech. Mike doesn't run a single scan. That's what I didn't tell you. Anyone that's listening, he's made back-to-back months of over $3,000 in profits with a $25,000 account. And he's never run a scan. He doesn't know how to. He's never sent a text. Yeah, he could. Solitaire works for him, and I've convinced him how good it is to use Skype. Ken, like I say, fine. If that's what you got to do, just make sure you turn the volume down so that you're not being influenced by it. Here's the thing, guys, and this isn't to be mean spirited toward any of those guys, but what do they have to say about your money? Should they have any influence over your decisions on your money? Do they care about your money? No. You know they don't. So they should have absolutely no influence over your decisions to trade. So in that light, what difference is it that they say something about a trade? If it doesn't fit you as a trade, if it doesn't match your risk tolerance for a trade, you just wasted your time. It has no bearing on how you are going to trade it or whether or not it fits your rules. Thank you, Betsy. No sales here. Nobody heard me talk about anything sales tonight. We're not playing games here. This is serious business of a trading. We make our living from this. And I hate the industry in the way they pimp this stuff out. All we have to do is stay focused on our set of rules, on our trade goals, on our stocks, and wait for those trades to come to us. Yep, follow price. Jay Clark, I'm pretty sure you know what I'm going to say on SQ. SQ, beautiful chart. Great looking chart. Okay. Big move. All right, where does your stop loss need to be on this trade? And are you seriously telling me you're willing to take that much risk on this trade? Then what's happening here, Jay, is you're running into a discipline problem. No, you cannot put a stop loss just wherever you want it to be. How's that worked for you in the past? Well, the chart tells me the stop loss should be here, but I know better than what the market is saying. I'm going to place the stop wherever the heck I want it to be, and I know that's going to work. That's not how it works. It's never worked that way. You can't just willy-nilly place it and say, hey, it's a beautiful chart. It's racing like crazy. Oh my gosh, I'm missing out. How do you know that this stock isn't going to turn around tomorrow and come right back down in here into support and then place a really nice candle right above the volatility stops where you'll take almost no risk or very small risk in the trade? Not, you always have risk, but very small risk in the trade. Just like it did here. Popped up, pulled back, found support, buyer stepped in, pushed it up. Popped up, pulled back, buyers stepped in, low risk entry. So somehow the rules of the market change because you get excited about a big move in the chart. It might, Jay. It might continue to run tomorrow. Does that justify taking a bad trade today? I can sit here and say might and hope for 100 different scenarios on there. That doesn't make the trade right. I can just as easily say, probably reverse tomorrow. I can tell you, and the reason I'm sounding so forceful on that, Jay, is because literally it cost me years of time and lots of money because I would do this repeatedly. How many of you have ever felt this? You enter a trade and you're almost hesitant to enter the trade because just almost as soon as you do, the stock pulls back. Almost as if someone is watching you. That's a problem of chasing. You're chasing the trade. You're buying the stock at closer to resistance than to support. That is the exact problem that plagued me for a long, long time. Because I was constantly chasing. I mean, I gave you 2 examples right here. Stock pops and moves. Don't chase it. Wait for the low risk entry. Which one was the easier trade? I buy this one. This pullback occurs. How many of you have done this? Buy it. It starts to pull back. Oh my gosh, I didn't think the loss was going to be this big. Why did that happen? Because I didn't plan my trade right. And so you take the trade off, and then the stock goes back up. Isn't that almost worse? By the time the pain is so great you can't take it anymore, you exit the trade, the stock goes up. That's a trader that chases. So wait for the next entry. The market is going to be open the day after, and the day after that, and the day after that. And if this just moves clear on up here, it doesn't matter. It's not the right trade now. It's not the right trade then. The right trade will come when it rests and pulls back, finds a price support, a higher low, and gives us a low risk entry. And it really doesn't matter how long it takes for that to occur. Because if we wait for the right entry, the entry that fits us, we'll be more comfortable in the trade, we'll have a lower risk in the trade, and we'll have more winning trades. Wouldn't it be nice to enter trades like this that I just pointed out? Popped up, pulled back, no heat on that trade ever came into play. Popped up, pulled back, no heat in that trade. Instead of always chasing and almost immediately getting into the fire, catching the heat as it pulls back. Well, that comes down to discipline, and that's something that we all have to work on, Jay. You've got to set a solid foundation and say, look, have that conversation with yourself. Okay? If you were the CEO of a business and had you as a trader, with the results that you're getting, would you still have a job? Because it's easy when you're standing aside as a CEO and you've got a bunch of traders that aren't making you money. Sorry, guys, you're not cutting it. You're not following the rules. You're gone. But when it's us personally, it's hard for us to make that decision, right? Yeah, fib tool can certainly be used if you like the fib tool. I will tell you that the fib tool takes some time to learn. So make sure you work on learning that tool. If that helps you identify trades, then by all means, that's fine. There's nothing set in stone that the volatility stop is the only thing out there or the only way to do it. There's lots of different trading systems, but none of them will work unless you follow a discipline. It will be after a pullback. It will be on a low risk entry. Yes. Okay. It's funny, isn't it? We see something like that. We know that we shouldn't take that trade. Yet we do everything we can to try and justify that trade. Well, if I go long term, can I justify it then? Well, let's go long term. Let's take this long term. Let's look at a weekly chart. Let's enter this trade right here. Put our stop loss where it needs to be on that weekly chart. That's a 15.89% risk to our stop loss. Does that work for you? Are you willing to take nearly a 16% risk in a trade? Nope. See? Answer solved. We don't have to, don't argue with yourself about it. It doesn't fit you. So don't trade it. That doesn't mean it won't ever set up a really good trade for you. Look at this setup right here. Look how tight that stop was. If we wait for the right trade, this trade on a weekly chart had a risk, still high, 9%. Okay? So make sure you're justifying those trades with your risk analysis in place. It's an easy decision when you look at a trade like that. It's an easy decision and say, I can't take that risk. It's a beautiful chart. But that risk does not fit me. It's not my trade. Okay? And until you get past that, you're going to struggle with that part. You're going to struggle. Okay? So this video, it will be posted on the TC2000, on the Hit Run Candlesticks website. But since we've had such a good group here, I'll go ahead and post this over on the YouTube channel as well, so you guys can have access to it, okay? So thank you guys for being here. Thank you for putting up with me kind of giving that tough love, but in trying to more of a coach mentality here of telling you the straight that, and that's it's always hard to hear. It's hard to hear, right? No one wants to hear that they're messing up. But sometimes we need that wake-up call so that we can turn our trading around and improve as a trader. Okay? Thanks, guys. Have an awesome evening. And please do me a favor, guys. If you haven't subscribed over my YouTube channel, please do that, because I post a lot of this information over there. And you can have access to it. I don't even put commercials on any of this stuff. I never made a penny on any YouTube video, and I don't plan to. Okay, so it's free over there for anyone to use. Take advantage of that. Thanks, everyone. Have a great evening. I really appreciate you being here. And we will talk to you all very, very soon. Let's listen to a little tune before we go. I'm going to play The Wait again since we had to cut it short. You can stick around and listen to it if you want to hear it all the way through. Take care, guys.